Good morning, Richard Calhoun, Creekside Realty. We're here to talk about real estate in week number 31. We're going to start off with San Mateo County, Santa Clara County, Alameda County, Contra Costa County, single-family homes, condos, and townhouses. And my reference is 2010 through 2019, 10-year median that I'm using in this set of data. This is looking at the number of offers accepted. The purple line is the current line. And last week I talked about we reached some stabilization. We've actually had some improvement. So now, if you look at this graph, since basically the middle of June, the market has definitely slowed down, but it's reached a new equilibrium. That new equilibrium is about 1,500 transactions below the number that we would expect to have, and that's on the four-county area. At least we've reached stability. That does not mean prices are going to be stable. It just means that the buyers are not fleeing. They were basically fleeing from April the 9th through somewhere around June 15th, and then from June 15th to present day, they've been basically flat. That's one of the reasons I take so many data points is you need several data points after the market has shifted to tell that it shifted. Down here, you don't know if it's going to turn around and go the other direction or not. Here, we're clearly climbing now. This is the actual numbers. You can see, even though the number has continued to go down, part of the reason for that is they normally go down at this time of the year, but we're still the 10th lowest year out of the last 10 years. Here is actual data. So you have the number of new listings, the number of active listings, and the ratio between the number of new to all listings, which I'm not sure is significant, but it's broken down by the different components. If you wanted to get an overview, I would look at single family homes for all four counties. And if you look at that, new listings is down 10%, total inventory is down 2.5%. Offers accepted is basically flat from last week. Your DUI, which I think is really important, has improved slightly from 55.7, almost 56, down to 54. That's not a change in the marketplace by any stretch of the imagination, but it is a slight improvement. It's basically a plateau. The number of offers accepted is actually up 5 from last week or 6. That is not a significant number. I would call that flat. And then the DUI, and this is based on 5 weeks, where the first group I went over was based on 1 week. And again, over the last 5 weeks, DUI has improved slightly. Number of closings is just, and I'm not even sure that last week is last week. I think it might be from several weeks ago. I think I wasn't updating it. I do know the 5-week data down here is accurate. And average days on market now is up to 20. Median days is up to 14. The sale price to list price ratio, still Bay Area wide, more than 50% of the sellers are getting more than their asking price. In Santa Clara County, it is now below 50%. It's the only county where it's below 50%. And it's the only type of property where it's below 50%. Even condos in Santa Clara County are at 52.5%. The average overbid is just over 100%. The median is just over 100%. Again, Santa Clara County single family homes appears to be doing the least well, and it's exactly at 100%. And it will probably be at 100% for quite a while, because there are a fair number, usually about 15% of the market is at the list price. So when you first get there, it takes a while to go through there. And then the 10 percentile pricing, the median price, and the 90 percentile price. Combined, you're at 680. In Santa Clara County, you're just over $1 million. Now we're changing to what I call macro data, and we're only looking at San Mateo County and Santa Clara County. We're looking only at single family homes and condos and townhouses, and our reference sheet has changed to 2015 through 2019. Here's the overbidding. This is how much pressure the buyers are feeling. The purple line is the current line. Last week, I talked about we were on the burnt orange, and I was talking about it looked like we were reaching some stability. Keep in mind, this is data that's closing, so it's data not recent, but 5 weeks back. But this last week was definitely another decrease to the purple line, and it's sort of surprising on how rapidly we seem to be moving to the blue dotted line, which is the worst week we ever had way back in November of 2001. I think what we are going to experience is, as we get closer to, as this purple line on the axis gets closer to the break point here, and actually the break point's way over here, it's going to take longer and longer to get there. So I think I was under the misconception I only had to get to here. No, I have to get all the way over to here with this point. This point has to get to here to match the worst. So we still have quite a ways to go. But as we get closer to it, I think there's going to be more and more resistance. And the reason for that is this is graphs based on the seller's asking price at the time the offer is accepted. And buyers tend to be hesitant to go down in price, and instead they wait for the seller to lower their list price. So once you get below 100%, the sale price to list price ratio does not drop nearly as rapidly as it does when it's over 100%. Same data, just only 12 weeks. And nothing really to comment on. It's just a little cleaner. You can see the dotted lines are the oldest. They were the best. Then your dashed lines, and then your solid lines are the most recent 4 weeks. Here's looking at a recap. You've got 3 lines, but only 2 measures. The blue line and the gray line are both measuring inventory. The blue line is the total inventory that's available. So you can see we peaked up here at about 122% of the expected inventory. We're now down to about 110%. And I would actually say that's a little under 110%, maybe about 108% of the inventory you'd expect to have. So there's still 8% more inventory than you would expect, but that's a significant improvement over 20%. The gray line is the number of new offers that are coming on compared to normal. And you can see since the market has changed, the number of gray line is below the median and is more so in the last couple weeks. What I think that boils down to is a lot of agents have a pipeline where they take a month or 2 to get a listing ready to get on the marketplace. And the sellers that came on the marketplace when the market was still hot, before people realized that the market had changed, are in that pipeline and they're moving through the process. Now we're through that, a good portion of that pipeline, and sellers now aren't willing to go into the pipeline because of the change of conditions. So we're getting less inventory coming on. The red line is offers accepted. And even though just 2 weeks ago was a pretty low number, and that may actually be last week, that looks like just last week was the lowest number in a while. Now we're up quite a bit. So this may bounce around a little bit, but you can see that the decrease starting back here on week number 15 to week number 16 was pretty dramatic, or 14 to 16 was pretty dramatic. You went from 20% more inventory offers accepted than you expect to 20% less. We've been bouncing around that 20% less, and now we've had a week of improvement, which is always a nice thing to see. Here's the DUI, which is the single biggest indicator in my opinion. You can see the plateau. There's a lot of bounce in it, which is a little bit unusual. This is only 1 week data, so that explains some of the bounce. But if you look at it, you clearly went up, and now I would say we've been level, and we've probably been level since about week 25. So we're in week number 31 now. So we've had about 6 weeks of stability. And so even though that would suggest we might start seeing stability in the sale price, I think there's a lag time, just like there is at the beginning of the year when prices are normally going up, where I believe there's a step function increase in market value. Nobody's willing to acknowledge that. So there's a rapid increase. So now that we've gone down, I think we're going to have the same thing. So even though it appears that the market has stabilized and we're at a plateau for the time being, I think there will be a slight decrease in price pressure. I don't think it's going to be like it was 6 weeks ago where we lost 20%, and we'll see some of those numbers in the near future here. Now we're looking at the 5-week data, and you're looking at the number of new listings and the number of new offers. And basically the takeaway here is we're still having more new listings come on the marketplace than we've had new offers accepted. And you can see for the last several years, they've really been equal to each other, and you have to go all the way back to 2015 before the number of the new listings coming on was greater than the number of new offers. This is the DUI that I'm talking about, and you can see that you've gone up and you've rolled over now for a couple weeks at least. And on the interesting note that I've pointed out before, on the way up, we went up and we plateaued, we went up and we plateaued. Now we went up, we plateaued, and now we've come down. I don't know which direction that's going to go, but this to me is the leading indicator, and this is going back 5 weeks. And if there's an improvement now, most likely it's going to improve. But if this coming week is worse than 5 weeks ago, the DUI will increase. If this coming week is better than 5 weeks ago, then the DUI will continue to decrease. This is looking at days on market. A lot of people follow it. It's the only reason I put it in. This is, in my opinion, lagging data, and it doesn't change very much. It's starting to show now. We went from somewhere like 8 days on the median to something like 14. So you've gone up, not even 100%, where the DUI has gone from something like 15 to something like 55. So it's been a factor of 3, much more responsive, much greater, harder to miss, where days on market, it takes time for the listings to accumulate time on the marketplace. The other thing that you got to pay attention to is what sells tends to be the attractive properties. And if instead of looking at days on market on what has sold, looking at days on market of what's on the market and not selling would be actually a better indicator, but still DUI is still a far superior indicator. Sold price, you can see we've come down on the median price, even the 10 percentile and the 90 percentiles come down. We'll see that a lot of the depreciation is gone, but for the meantime, I'll see if anyone's got any questions. Does anyone have any questions for me? Not hearing anyone, I'll proceed and we'll go over these URLs at the very end in case you had questions on those. This is the new inventory down here on the blue. The yellow is the 5-year median. So you can see it's following it fairly well, but now you have this deficit. That's basically sellers going, hey, the market has changed. It's not a great market. I'm going to wait till the market improves, actually helping to improve the marketplace. This is total inventory. The total inventory now you can see it is above the level of inventory you'd expect it to be, not greatly above, but slightly above. And when inventory is above where it should be, that is a slower indicator of the marketplace. This is the number of new offers. The number of new offers is below the yellow line, the 5-year median. So again, when the number of new offers being accepted is low, that's not good. This is the map geographical distribution. This is single family homes only. You'll notice that there doesn't appear to be any color here. That's because it's white. It's white from 42 to 77 days. Cupertino Sunnyvale is the hottest marketplace at 25 days, followed by Foster City, which is a real small one. And then I think Daly City or Redwood City comes in next at 48 days. Actually, Campbell at 45 days. So you can see there's a lot right in the 45-day range, which is just at the beginning of that white color. We only have one area into the blue, and that's Atherton, Menlo Park, the expensive areas in San Mateo County, and they're sitting there at 95 days of unsold inventory. This lets you look at the time, and if you come back here to May, you can see how red the graph was, and then you can sort of see how pale it got. And now we're going to start seeing what happens going forward. Is it going to get paler, or is it going to sort of stabilize? And I think it may get stabilized sort of in this white color. It may improve slightly, it may deteriorate, but there's clearly a marked difference between the right-hand side current data and the left-hand side data 3 months ago, I guess that would be. This is the days of unsold inventory. This is the 3 major components. The red is Santa Clara County. It goes horizontal here, and that's just so that you can see the data a little bit better, but you're down somewhere around maybe 54. San Mateo County, single family homes is the gray line, and the brown line up here that's hard to see. I'd say that's about 58, and condos might be about 57, or maybe condos are 56 and single family in San Mateo is 57, some number around there. It's hard to read off the graph. Here is the overbidding. This is the magnitude of overbidding. I changed the order. I had been doing frequency, doing alphabetical order, and the reason for that is it's my belief, and the data is showing this, that the magnitude is going to drop more rapidly than the frequency of overbidding. In other words, if you've been overbidding, the consumer's used to overbidding, he's not going to stop overbidding immediately, but instead of overbidding 110%, he'll overbid 105%. I'm doing it sort of in the responsiveness, DUI being the most responsive, magnitude of overbidding being the next most responsive, and the frequency being the least responsive. And you can see there's clearly pink up here in Daly City, and my data wasn't locked. It was bright red for the several weeks, but now it's starting to go to shades of pink. And you can see a little pink here in Cupertino Sunnyvale. If someone pushed, and if I cheated by looking and saying I'm at 103, there's a slight tint of pink here in the Bay City area. But here's the actual numbers. You can see an awful lot are getting very close to 100%. They're definitely below 101.5%, which is where they go white. And I think the vast majority of Santa Clara County is in that realm. Here is looking at the magnitude overbidding, and you can see that we were up here at something like 118%, and now we're down here at something like 101%. So that gives you a clear indication. Now the data is not flat flat. When you see flat data with me, it's a way to help me know that I'm getting the recent data on here, and it also makes it clear what the current level is, so it's a little easier to read the number. This is just the magnitude of overbidding. You can see how dramatically it came down, and you can see that you're getting real close. This is Santa Clara County, San Mateo County, single family only for 1 week. So the other data is the 5 weeks. So the stuff in the last week is down here. So we're about ready to go to the sellers getting below their asking price in only 1 week's worth of data. Back to 5 weeks worth of data. This is the frequency of overbidding. You can see there's a little more color up here. I can clearly see the color in the Bay Cities here. Cupertino, Sunnyvale is definitely redder. And then you can see there's some other areas like Foster City that's got some color. So you can see that it's a little bit more red than the magnitude of overbidding. This is the frequency of overbidding. You can see the drop down's pretty severe. These lines look to me like they're going up, but I think that's an optical illusion because I should be just replotting the same data. I'll check to make sure that's happening because it really does look like it's going up, especially when you compare the yellow line to this horizontal grid line, because here it appears to me to be closer than over here. It should be the same data repeated. I will look into why it doesn't be, but here's your last data point where it basically goes horizontal. So you have, and the data is accurate. It's just, I'm not sure what's going on with my holder. So you basically, your frequency of overbidding in Santa Clara County single family homes is the least favorable to sellers. Santa Clara County condos is next, and then San Mateo County single family homes is doing the best. This is the magnitude of overbidding on 1 week. You can see that the rapidly getting down to only 35% of the sellers getting more than their asking price in the last week. Here has nothing to do with market conditions. This is price only. The redder the color, the higher the price in the market. The bluer the color, the lower. And Redwood City in San Mateo County is the median, so it is white. So you can see Mountain View and Cupertino and Sunnyvale are roughly the same price. Bay Cities are roughly the same price. Then you get into Saratoga, Los Altos, and Menlo Park being all more expensive, and the blue areas are the least expensive. The middle number is your median number, median sale price. The number to the right is the cheapest 10 percentile, and the number to the left is the 90 percentile, or the most expensive 10 percentile. This is pricing over time. I need to clean up my data a little bit so we have access for references, but you can see that the downward trend is clearly there. Here is something that becomes pretty stark. And if you look now, here is the current appreciation, and this is over the entire 2020 calendar year. So don't get me wrong, having 10%, which is the lowest number I'm seeing, well, in single family and condos, you actually have negative numbers, but in single family homes, 10% to 20 to 35% appreciation in 2 years is fantastic. But just back in this year, this is where we were. We were into the 50s and the high 40% appreciation. So we've wiped out, and in a little bit, we'll see a graph, a table where we wiped out almost all the appreciation we had in 2022. Here gives you a summary of the data, and this is for today. I didn't update the data apparently. So here's your DUI, your magnitude of overbidding, the frequency of overbidding, and the price. So you can get some idea what conditions that you'll experience in the different areas that you're going out to. It just, if you're a consumer and you're looking in a particular area, it gives you an idea what you're up to. If you're a real estate agent and working in a particular area, it knows what kind of conditions you are in. Here's the table I was referencing, I believe. So here's the appreciation. So the appreciation currently is 21%, call it 22% in Santa Clara County single family homes. In 2021, it was 25% over 2020. So basically any appreciation we had in 2022 has been wiped out. And you can see now, if you go down to San Mateo County single family homes, it was 25% in 2021, like Santa Clara County, but it's now down to 12% or 13%. So not only have you wiped out the appreciation in 2021, you've wiped out half the appreciation we experienced in 2021, and we're getting back to the prices we were seeing shortly after the shelter in place on the pandemic allowed us to start showing homes. And if you go down to single family condos and townhouses in Santa Clara County, you're at 16%, which is below the 2021 number. And if you go to the Bay Cities, it's actually negative number. So what that's telling you is the median price of what's selling in the Bay Cities in condos in San Mateo County is now 8% lower than what it was in 2020. Now, I will point out, and I've crossed out the data here to try to remind people, I believe that that area, specifically Redwood City, has had a lot of low-end, high-density condos being built since 2005. Those are now hitting the resale market. So I think there's simply more supply of low-end homes. So even though what's selling is down by 7.5%, I don't think property values, if you were to look at it, were down by 5.5%. Now we're going to look at Santa Clara County single-family homes only. And what you're looking at here, get my reference. So this is DUI. This is the worst DUI we've had, the light blue line, in the 5 years of 2015 through 19. This is where you'd expect it to be, the median, and this was the hottest marketplace we had. Here we are up here. So we're having a slower marketplace than we've had from 2015 through 2019. But keep in mind, those were 5 great years. This is now looking at the delta. Where should DUI be? You'd be right here on the horizontal axis if we were having a normal year. You're up here plus 15 days. So whatever the normal DUI is, and maybe the number's somewhere around, well, we know the number's somewhere right around 40. So the median days of unsold inventory is 40. And if you're 15 above that, you're somewhere, and it's just below that, you're somewhere around 54 days. This is looking at the delta change in DUI over the last 7 days. So you can see that basically since around July 10th, maybe, we've been improving slightly, which is a good thing. But you can see from somewhere starting right here, middle of April onward, we were deteriorating very rapidly. This is looking at apples and apples. This is looking at August 5th data. So I went back 1 day, and this allows you to compare the last 20 years. Some of the big takeaways are, if you look at the median and average days on the marketplace, they're really in line with what a lot of the numbers you see up here. But keep in mind, that number was very low, so it takes a while to get up to 28. But look at 28 versus what's selling of 20. So the homes that are selling have 8 days less of time on the market than the homes that are still on the market that haven't sold. Now, if you look at DUI, you're at 50. If you look at the history up there, you got to come all the way back to 2012 to get a higher DUI, and then they're back, it was higher. So 2008, 2009, there's years where we had higher numbers. I'm seeing 139, 140 in 2007. So 50 is still good in relationship to that, but it's definitely different than what we've been. Sales per day at 24, that is one of the lowest numbers. In fact, when you come back here, I don't think you're going to find a day lower than that. So that's the big takeaway. We're selling fewer homes this year than we ever have in the 20 years that I have on the slide here. The median, the overbidding down here at 101% is roughly the same as a lot of them, 46%. You can see that's actually a pretty low number until you get back to about 2011. And then your pricing, you can see that you're below where we were last year. And on the 10 percentile, we are actually slightly above on the median, 1675 versus 1610. But with that, this is the URLs, and I'll be ready for questions in a few minutes. The green is my base URL. That's the key. You add 2022 to get to the live presentation Saturday morning at 9. If you put in H 2022 08 06, you'll get the handout. I try to get it up 15 minutes early. I got it up about 15 seconds early today. So if you went looking for it before the meeting and it wasn't there, it is there now. And if you want a specific archive. So with that, I'm finished my presentation. Does anyone have questions for me? Not seeing anyone unmute themselves. I will thank you for attending and see you next week. Take care, everybody.